Hello everyone, thank you for attending today's webinar. This is the first of two that we'll hold, entitled What Physicians Tell Us They Want to Know About Disability Insurance Planning. We have a lot to cover. I'm going to move quickly. I will tell you there is a resource website available to you that I'll give you more information on toward the end of our session. So please just take a few minutes and jot that down when that information comes up on your screen. So first of all, let me introduce myself. My name is George Davidson. I am the Chief Executive Officer of Secura Consultants in Minneapolis. I have 32 years of experience in working with physicians and financial advisors that work with physicians specifically to income protection planning. So I hope you'll be able to glean a few insights from my comments today. And again, please remember there will be additional details on a resource website available to you that I will mention at the end of the session. So let's get right into it. What physicians tell us they want to learn about disability insurance planning. We'll have about 15 minutes of information. We'll provide some details for you of a special program of insurance available to all graduate medical education enrolled individuals, both currently enrolled and to depart here shortly. And then also free information on an ebook by Dr. Vicki Rackner, and I'll tell you more about Dr. Rackner and this special offer again as we get toward the end of the session. So what is personal disability insurance? There really are two basic types of disability insurance plans. One is a personal policy that you purchase, and the other is a policy or policies that an employer might provide you, or a practice if you're involved as a partner in a practice. There's some very distinct differences between those two types of plans. The second session will deal with what we call group long-term disability or employer-provided plans. This first session will deal with personal disability insurance policies, again, policies that you purchase on your own. And I will tell you that these types of policies are your primary and best source of protection for you and your family should an accident or an illness impair your ability to practice. So that's the first thing you want to keep in mind. But what physicians tell us when they're looking at these plans is the first and foremost that terminology is very confusing, and understanding what these different terms mean is an important part to your being able to make a good decision. And there are an awful lot of these terms, provisions, definitions that we could talk about. But since our time is limited, we're only going to spend our time today basically reviewing these 6 terms that you see on the screen, and then also some information about underwriting and how much coverage you can purchase. So that's, again, the agenda for the day. So let's start working our way through these 6 terms. First of all is non-cancelable and guaranteed renewable. Why is that important to you? Virtually every insurance policy you'll look at will be non-cancelable and guaranteed renewable. But you should note that these two terms can be separated, and that you may be presented with a policy that is guaranteed renewable only. And frankly, that might be fine if you're a buyer in, let's say, your 50s, but for younger purchasers of disability insurance, we recommend both non-cancelable and guaranteed renewable policies. So what does that mean? Non-cancelable means that the insurance company can't change your premium. Guaranteed renewable means the insurance company cannot change the terms and provisions and definitions of your policy. Now, both of these provisions typically expire, and again, the typical expiration is your age 65. It could be longer, but typically age 65 is the expiration of these provisions. After that point in time, you typically have to be working full-time, and the policy may change and the premium may change, and that will vary by carrier. But it's important to note, again, that you look for a policy that's both non-cancelable and guaranteed renewable. So, secondly, elimination periods and benefit periods. And what an elimination period, or you may see it referred to as a waiting period, what that is the amount of time you have to wait before you begin to accrue benefits. This is a deductible, for lack of a better term. Typically, we see most policies for physicians issued with a 90-day, that's 90-day elimination period, which means you have to be disabled at least 90 days before, again, benefits begin to accrue. Now, what you want to be sure of is that your elimination period is not consecutive days. We see, especially in treatment situations where, let's say it's a cancer, where there's chemotherapy or radiation treatment or what have you, where individuals will be able to work for a couple weeks and then miss a couple of weeks. And when that happens, you need to be able to accumulate these days of your elimination period over some period of time. And typically that might be 180 days or even a year. So you want to look for a period of time you can accumulate those days of disability, and that's important to you. But also note again that 90 days is typically the best value. You may see illustrations or proposals that are offered at 180 days. We typically don't recommend that just because the amount of benefit you're giving up, typically if you have one claim, you're going to make that back. So really not the best option in most situations. Now, your benefit period is the duration of how long your benefit will last. Most times you'll see this represented as age 65, age 67, age 70. There'll be some termination point for when your benefits will, in fact, run out if you continue to be disabled for a long period of time. We recommend an age 67 benefit duration or benefit period. And the reason for this is the old age 65 plans were based upon Social Security normal retirement age of age 65. Obviously, for virtually everyone who's listening to this webinar today, age 65 is not a date that is meaningful as far as your Social Security benefit. It will be at least age 67, if not longer. So having a benefit period that will last to that period of time is very important. So we recommend, again, that you look at least an age 67 benefit period. Now, the cornerstone of any disability policy is the definition of disability. The definition can be expressed in many different ways, but we recommend that as a physician you look for a policy that defines your occupation as your own specialty. And this is important if you have a specialty, a board-certified and recognized specialty, that you are in fact protected in your ability to do those specific duties that are required. And that's a special, we see that with surgery and other types of specialties where there are certain types of skill sets that you need to have in order to be able to complete those duties. So what the definition of disability will typically state is your inability to perform the substantial and material duties of your occupation, and then your occupation being defined as your recognized specialty. So that's a crucial component of any disability plan for a physician, and you need to make sure when you're looking at coverages that that's what you're getting. The next part of this is, what if you're not totally disabled? And what this essentially means is you're able to practice in your specialty, but your ability to practice has been impaired. Either you can't practice for as long, let's say that you have a back condition that is precluding your ability to stand for as long as you normally would have to, and therefore instead of being able to work 40, 50, 60 hours a week, you're only working 20 or 30. In those situations, your income will be impacted, and you want to make sure that you have a benefit that will help offset those loss of earnings. So this is what residual, or you might see it referred to as partial, disability does. And make sure that that provision is long-term. Some plans have a very short-term period. They might see a 6-month partial or a 2-year partial or residual. You want a residual partial that lasts for the entire benefit duration. So that's that age 67 we talked about earlier. Also, it's important to look for what may be termed recovery provisions or some form of residual provision that will allow you to actually be back to work full-time or back to work doing all of the duties of your occupation, but you continue to have an income loss due to the fact that you don't have patients in the pipeline, so to speak, or you haven't been able to perform surgery, so therefore your production bonuses are going to be less at the end of the year. These are all ways that your income can be impacted even though you're back to work now full-time, and you want to make sure your policy responds to that. So that's very important. Next, we want to look at cost of living adjustments. And what are those? Those are essentially provisions that will adjust your benefit as over the years as your claim moves forward. What you don't want to be in a situation, or don't want to have happen, is that you're living on a fixed income. And even at the higher benefit amounts that many physicians have, the problem is that your cost of living isn't going to go down. In fact, what we see is with most disabled people, their expenses go up. Either it's unreimbursed medical expenses, it's home modification, it's special cars or things that you have to be able to be mobile. All those things cost money, and at the same time the cost of buying food and all the other things is going to continue to go up. So if you're unable to work for 3 years, 5 years, 10 years, 20 years, you don't want to be in a situation where your benefits aren't increasing to reflect those changes in the cost of living. So therefore, especially for younger buyers, cost of living adjustments are crucial. They do make up a fairly high amount of the premium. So oftentimes a financial professional might leave this off if they feel like that you're not able or willing to contribute the amount of premium it takes to have a comprehensive plan. So just be aware of what they are and how they work, and if you choose not to have that, understand the importance or what you're giving up. And then the final provision we'll talk about in today's session is future purchase options. And this really is critical to a resident to have a high-quality future purchase option. What this essentially means is you are guaranteeing your ability to purchase additional insurance regardless of your health. And we'll talk more about underwriting here in just a minute. But health is one of the reasons that we see physicians not being able to purchase disability insurance or not getting disability insurance that covers all of the things that can happen to someone. So, for instance, if you've had back treatment, back pain, your policy may not cover any disability related to your spine. And if you have a future purchase option and you purchase a policy without these limitations, all future policies you purchase will cover all of these situations, even if you currently have a problem. So this is crucial, and it's very important to have in any policy that you purchase. So keep an eye out for that. It may not be called future purchase. It may be guaranteed purchase. There may be some different terminology based on the insurance company, but just understand this is crucial that you have this ability. All right, so moving on. How much coverage do you need, and how much will an insurance company give you? Very important question, and unfortunately, it's not an easy one to answer. There's no flat percentage of income that is recommended. You'll see a lot of information in the financial press talking about buying 60% of income. There's no magic to that. Most people would say, I can't handle a 40% loss of income. In fact, we find options for and suggest that physicians look to protect as much of their income as possible. And obviously, at this stage in your career, your income will change dramatically in the years to come. That's where that future purchase option comes in. But just keep in mind that the likelihood is, as you move forward in your career, that you'll have situations where insurance companies, you'll want more and you won't be able to get it, as opposed to the other way around. And that's because of things that we call issuing participation limits. So what that essentially means is insurance companies will offer a sliding scale of replacement. If you make $100,000 a year, you might be able to get 60%. If you make $400,000 or $500,000 a year, you probably will not be able to get more than 40% in what we'll call the traditional market. So it's important that you understand that this number changes. It's not a flat percentage. So you have to decide what you need based on your particular situation, your expenses, your debt load coming out of training. All those things are important to you, and then find an amount of coverage that satisfies those needs. However, one thing that you'll need to keep in mind is that eventually you will most likely hit these maximums, and they're not the same for every insurance company. And in fact, one of the secrets that we'll talk to you about is that you can typically obtain higher benefits over time by purchasing from two different insurance companies. An issue limit is how much the insurance company will issue. A participation limit is how much they will participate with other companies. And it might be an employer plan, it might be two individual policies, it might be a combination of the three. The point is, this really is an important leverage point that you need to understand now, is that you should purchase your disability plan from at least two different insurance companies if you can. And this will provide you with the opportunity to protect your income more fully in the future. So one of those secrets of the business. Now, once you leave training and you go out into the marketplace and either you join a practice or start a practice or join a hospital or a clinic, you may be provided employer plans, and that's that employer group LTD we talked about that we'll cover in our next session. understand that these employer plans, there are a lot of good things about them. There are a lot of things that aren't so good, and one of those things is it does impact your ability to obtain your own coverage. And there'll be a lot more that we'll talk about in the next session, but just keep in mind that that's one of the reasons that purchasing some level of coverage before you leave training is so critically important. Most insurance companies offer a quote-unquote new physician starting practice limit. Now, we understand you're not a new physician, but you are, when you leave training, going to be, again, out in the marketplace, out joining practices, out with a hospital, what have you. And because of that, you can typically purchase a set amount of coverage regardless of your income. And that's crucial, because once you join that practice and get involved at that hospital, the clinic, this goes away. And now you're limited based upon your current earnings and any other coverage that might be provided to you. So where you could leave practice and basically solidify your ability to buy insurance all the way up through your whole career without ever proving insurability, now you join this practice and now you think, well, I have more time, I'll pay some attention to this issue. And the reality is you've actually hurt yourself, because now instead of getting $5,000 or $6,000 or $7,000 a month of personal coverage that you control, you might only get 1, 2, or 3, and therefore be basically at the mercy of your practice. So that's important. Please keep that in mind, and something a lot of folks don't talk about, but it's crucial. So now let's talk about underwriting, and I'm running a little behind time, so I'm going to speed up even a little more. Medical and financial underwriting. And if you think about buying a house, for those of you who have gone through that process, the bank underwrites you as a credit risk. So you're giving them all types of information about your finances and your job and debt and all sorts of things, and they make decisions whether they think you're a good risk or a bad risk. One does not simply get disability insurance. You can't just go out and purchase it. You have to go through an underwriting process of some kind. Now, underwriting can be simplified, it can be guaranteed, it can be full underwriting, and all of those things impact what information you have to provide. So, for instance, the program that I'm going to tell you about here in a second that's available to you now is what's called a guaranteed issue program. And that essentially means that regardless of your medical, regardless of your financial history, it's a short form application, and with very few exceptions, you get what you apply for. Once you leave training, you may or may not ever have access to that type of program again. But what we do know is that more times than not, you will have to go through medical and financial underwriting. And what that essentially means is everything about your medical and financial history has to be disclosed as an open book to the underwriter, and they'll make decisions based upon whether they think you're a good risk based on things like medical testing, bodily fluid tests, paramedical tests. They'll look at your medical records from your treating physicians, and what can happen is your policy may be limited, your policy may include additional premiums, or they may decline the risk, and this happens quite a lot. Industry-wide, probably 40 to 45% of all policies are approved or approved other than as applied for. In other words, they're modified or they're declined. So you've got a significant chance once you leave this period of having some underwriting, guaranteed issue underwriting, that any future purchases of this type of insurance, you'll have some limitation that will be applied to you. So it's important to keep that in mind. Now let me tell you a little bit about the program that's available to you now. We call it the GME Disability Plan, Graduate Medical Education Disability Plan. It's available to those folks that are in training at various levels, and more importantly is when you are leaving training, you have the opportunity to acquire a full, what we call a full GME plan. And there's more information on this at this website, so if you can jot this down, www.gmedisabilityplan.com. That's the resource for you to find about this plan. And keep in mind that once you leave training, this will essentially go away, the opportunity to take advantage of this. So why would you do this? First of all, you get coverage now. Understand that when you leave training, right now there are some group employer-provided benefits there as a safety net. But once you leave, that goes away. And even if you have an employer plan that will be available to you when you start practice, you've got a period of time where you're exposed. Also, that new plan will have what we call a pre-existing condition limitation, which means anything that you've been treated for, you're going to have a period of time where you're not covered. And that's an important consideration as well. We worked with a physician at Mayo that left, packed their family up, got in a car, driving to Omaha for their first job, had a car accident. He had severe back and leg injuries. was not able to practice and joined the clinic and had no coverage. So this is real world stuff, and it can happen, so don't take that risk. Go ahead and get your coverage now. You can always change or cancel or quit these plans. You own them. You make those decisions. But once you have an issue, you'll never be able to get it back. Also keep in mind, disability insurance are priced based on age, they're priced on occupation, they're priced on your specialty. There's all types of things, but one of them is gender. And you want to purchase a policy where you have discounts and gender neutral rates. And that's especially beneficial to females. Females will pay anywhere from 40 to 60% more than males. And so if you can get this gender neutral discounted rate, you're essentially paying the same rate as a male, and it's tremendous savings. And with this plan, it's available to you not only in the plan you purchased today, but also the plan as you purchase additional increases in the future, which is huge. You have discounts, and also this is the last point, a guarantee issue plan, which means any existing current or past medical issues that you've had will not impact the underwriting. Excuse me. So as long as you are actively at work as a resident or fellow, and there are a few other considerations, but very minor. So as long as you're actively at work, you're not currently disabled, you can qualify for this. No limitations, no additional pricing, and then all those future increases are available to you on that same basis. So this is very significant. So finally, let me tell you about our gift to you today. When you go on the GMEDisabilityPlan.com website, which I will flip to here just momentarily, excuse me, Dr. Vicki Ratner's white paper, Get More Patients Starting Today. And Dr. Ratner, I've had the opportunity to spend a lot of time talking to Dr. Ratner over the last couple of years. We've asked her to provide this material for you. She was a practicing physician and left surgery practice to become a consultant to help physicians grow their practice. So when you go to this website that I mentioned to you, on this orange page you'll see this View eBook button, and I'm just going to click that. And what will happen is this ebook will come up and be available to you, and it's about 42 pages, and Dr. Ratner goes through a lot of information that you as a new physician can use to help you build your practice. And it's really, really good stuff, and it's, again, our gift to you. So we hope you enjoy it. With that, that's the end of our session today. Keep an eye out for the next session. If you go to GMEDisabilityPlan.com, there's a contact and information. If you have questions, just submit those. We'll respond to you directly. And we appreciate your time, and have a great day. Take care.